Good morning, everyone, and welcome to today's Financial Management for School Nutrition Program Directors webinar. Today's webinar is entitled Ethics of Financial Integrity and Financial Reports and is sponsored by the Pennsylvania Department of Education, Division of Food and Nutrition, in collaboration with Project PA. I'm Elaine McDonald, Coordinator of Project PA, and I will moderate the webinar. Just a few pieces of housekeeping before we begin. You can download the slides for today's webinar in two different formats from the file share box in the upper right-hand corner of the screen. They're available as one slide per page or in handout format, which is 3 slides per page with space for notes. This webinar provides 1.5 continuing education credit hours. At the end of the webinar, the continuing education certificate will be available to download from the file share box. We are recording today's webinar and we'll be posting the audio from the webinar along with the presentation and the Q&A on the Project PA and School Nutrition Toolbox websites. Look for that in about a week or two. We will take questions following today's presentation. In addition to today's presenter, we have Diane DeBolis and Cecilia Bodie from PDE connected via phone line to address questions following the presentation. You can use the chat box in the lower right-hand corner of the screen to type your questions. You may type your questions, submit your questions throughout the webinar. You don't need to wait until the end, and we'll collect the questions and have the presenter or PDE respond to your questions at the end of the webinar. Okay, I'm going to turn it over to Carol Gilbert, who is our presenter today. Carol Gilbert is from Gilbert Consulting. And if you just bear with us for a few seconds as we pull up Carol's presentation. And with that, I will hand it over to Carol.
Good morning, everyone. Welcome to today's training, the second in the series of financial management programs developed and sponsored by the Pennsylvania Department of Education, Division of Food and Nutrition, to build and strengthen your knowledge and skills in financial integrity, reporting, and analysis. Again, as Elaine said, please feel free to post your questions as the webinar continues. During this session, we will cover the following key topics: ethics and the role they play in financial integrity. We will define the specifics of the 3 key financial reports: the Statement of Net Position, which has also been called the balance sheet, Statement of Activities, also known as the Statement of Revenues and Expenditures, or for those of you that would have come from a for-profit side of business, you would also know this as your Statement of Profit and Loss. And finally, we will touch on the budget. The last key topic that we will take a look at will be formulas used to analyze financial data. Before we get started, we want to just review what we discussed in webinar number 1. We covered the basics of financial management. This webinar can be accessed on pairs, download forms under the School Nutrition Program Financial Management section. In brief, there are a variety of regulations governing school nutrition programs. The main one is Title VII, Code of Federal Regulations, Part 210, National School Lunch Program. Part 210.14 of that regulation relates to resource management and defines what is required of the school food authority participating in the school nutrition program. Your program account is to be a nonprofit account with a separate accounting of funds related to school nutrition program, also referred to as the enterprise fund. An enterprise fund generates its own income, produces goods, provides services, and charges for goods. During webinar 1, we also introduced you to new terms to assist you to discuss finances with your business manager, the school board of directors, and other administrators. Some of the terms you learned are listed on this slide. I encourage you to refresh your financial vocabulary by reviewing webinar 1. During Webinar 1, we also discussed the basics of the 3 key financial reports. Our training today will delve into the Statement of Net Position and the Statement of Activities. We will focus on the budget portion of financial management in face-to-face trainings to be offered later this fall. As we move into today's training, we're going to start off by discussing ethics. Today we can open newspapers across the state and read about someone who has made poor ethical choices in handling an organization's finances. What comes to mind when you think about the ethics of financial management? We all know there needs to be sound financial practices in your local education authority. Title II, Code of Federal Regulations, Part 200, Uniform Grant Guidance requires LEAs to maintain written standards of conduct covering conflicts of interest. The main concept of ethical financial management is to openly and honestly present facts about products used and services provided in the school nutrition program. Your role in maintaining the financial components of the school nutrition program is to act responsibly, to act with honesty and integrity, and to avoid conflicts of interest in professional relationships. Integrity is the key of being honest and having strong moral principles. In essence, you need to know the rules of your LEA and the school nutrition program and follow those rules when it comes to handling items like gifts, prizes at food shows and conferences, and ensure you represent your LEA at the highest level of integrity. Simply stated, financial management involves a high level of ethical behavior. So what does it mean to avoid conflicts of interest? A conflict of interest is a circumstance where activities or situations place an individual or an institution in a real, potential, or perceived conflict between the duties or responsibilities related to personal, institutional, or other interests. Avoiding conflicts of interest require you to act impartially. You need to make decisions with the best professional integrity versus personal integrity. You never want to make a decision that puts you into a situation where your decision might be questioned. A conflict of interest is a set of circumstances that creates a risk of professional judgment or action. It's important to ask key questions. Is this in the best interest of the students? Best interest of the taxpayers? Is it in the best interest of your program? And very important, is it in compliance with regulations? If you can't answer these questions or need additional guidance, please contact PDE. We're going to take a moment and look at a situation. You run a weekend business from your home providing catering services. You're in need of salsa, so you decide to buy excess USDA salsa at the donated food value from your school. Is this a conflict or not? Well, hopefully you're all sitting there saying, yes, this is definitely a conflict. You're purchasing food that is only allowed for use in the school nutrition program. Plus, you would have a personal gain because you purchased the food at the USDA value, not market value. Another component of ethical behavior is to comply with rules and regulations of federal, state, and local business and government, along with other appropriate regulatory agencies. Not only must staff be held accountable for meal sales and record keeping, the school nutrition program director must ensure all record keeping and reporting meets USDA regulations. So it's important to establish effective processes and sound procedures, including internal controls, to help ensure and validate accurate reporting and record keeping. As we discussed over the last several slides, the ethical components of financial management are quite complex. The final aspect of a sound program is to ensure transparency. Transparency is achieved through accurate record keeping and documentation of all procedures. Transparency establishes trust, which leads to limited questioning of unethical and inappropriate behavior. Remember, this is all very important, not only because of the points mentioned on this slide, but because you, your staff, and the program you operate are funded with taxpayer money. We're going to look at a few scenarios and determine if they are ethical, meaning that the accepted practice related to the principles of right and wrong, unethical, where the acts are definitely considered to be wrong, illegal, where the act is prohibited by law, or whether it's just a bad business practice. These would be practices which do not follow procedure or the goals and objectives of your LEA. So let's take a look at our first scenario. You find that a school is claiming more meals than were served. What issue or issues might be associated with this practice? Well, if you said both unethical and illegal, you are correct. The actual number of meals served must be able to be documented and traceable. It is illegal to inflate the meal count to collect more funds from state and federal government. Let's look at our second scenario. Here we have the same person collecting the money, counting it, making the bank deposit, and bringing back the deposit slip. Any issue with this practice? Not only is this a bad business practice, it's something that we want to be very aware of because one person should not handle all aspects of cash sales in the department. This is a failure to have sufficient segregation of duties. The lack of segregation of duties does not provide for a sound system of internal controls. This sets the employee up for speculation when the drawer is over or under. Audit trails for handling money are critical when and a very good business practice. So you want to make sure that you are auditing the flow of that money and how it is handled. Our next scenario, here we're accepting a tablet computer for use in the program in place of taking a cash rebate for product that we've purchased. What do you think about this concern? This situation may or may not be ethical, and let's look at why it could be either. You must be able to provide clear documentation that the rebate was actually available and how it was earned. Secondly, you want to identify how the product is going to be used in the program. In this case, the tablet computer might be used to open or start a kiosk serving area, or it might be part of a contest to boost breakfast participation. Again, if in doubt, know your LEA policies and/or contact PDE. Is it acceptable practice to claim second lunches as reimbursable meals? Well, this scenario is both unethical and illegal. Students may only purchase one reimbursable meal per session per day. If second meals are sold, they must be counted as non-program or a la carte sales. Now let's see how we would handle this situation. What if you're provided something from a vendor? The vendor gives you overnight lodging to attend a food show, or a trip or a vacation. You receive a gift or a meal or free registration to a golf outing. Well, this scenario involves several issues. It is unethical, illegal, and it is a bad business practice. According to the Uniform Grant Guidance 2 CFR 200.318C1, it is a requirement that the LEA write standards of conduct which establish policies to avoid real or apparent conflicts of interest and the acceptance of gifts and favors. Additionally, the standards of conduct must include disciplinary actions if the code of conduct is violated. Some LEAs have established that a nominal gift would have the value of a pen, a pencil, or a cup of coffee. So it's important to create that document and to know what your LEA sets forth for accepting gifts. We're now going to talk about the 3 key financial reports. The statement of net position, which was formerly called the balance sheet, the statement of activities, which was formerly called the statement of revenues and expenditures, or what you may also call a profit and loss statement, and finally, the budget. You may currently use one or more of these reports, or perhaps you're not involved with using any of them. During this session, we're going to explore the statement of net position and the statement of activities. The budget, which is the 3rd report, will be the focus of our face-to-face regional trainings to be held at a later date. The statement of net position, or the balance sheet, this report is completed at the end of an accounting period, such as the end of the month or the end of the year. This report may be new to some of you. You may notice that it also resembles the School Nutrition Program financial report filed annually in pairs. The data for this report comes from the financial information within your department or from the business office. This information is gathered from accounts payable, accounts receivable, and the general ledger. A general ledger is where all transactions are recorded for money coming in, which is revenues, and money going out, which are expenditures. Current assets are the cash or any other school nutrition program asset that will be turned into cash within a school year. This is also called a designated accounting period. Assets are generally listed first, and they generally appear in the following order, with cash being listed first, which is your currency, including your checking account, petty cash, and the cash in your cashier drawers, any temporary investments such as CDs and the interest earned on accounts, accounts receivable, money due from federal, state, and other funds, other receivables, which includes invoices from special events. Inventories on hand are also considered an asset, and these include the food and USDA foods and your supplies. Non-current assets include furniture and equipment less accumulated depreciation. The statement of net position is the only place where depreciation is reflected in the accounting process. Accounting standards require capital purchases to be depreciated over the life of the asset, which means only a portion of the asset is expended when purchased. The remaining amount is recorded as an investment. Then all of your assets are totaled. The second segment of the statement of net position is liabilities. This is the amount of money due from the school food service account to others for the period reflected, whether it be month or year end. Current liabilities are what is expected to be paid by the close of the designated accounting period. These include accounts payable, salaries, payroll deductions, money due to other funds, such as funds due to the school district for any payment made on behalf of the school nutrition operation. An example would be the district purchases a new walk-in refrigerator with general fund money, and your department is expected to pay the money back. There needs to be a loan document that outlines the specific details of the repayment. In addition, if the walk-in refrigerator costs more than $5,000, a capital expenditure request must be submitted to the Department of Food and Nutrition requesting approval of the purchase. The final line item is deferred revenue. Deferred revenue in accrual accounting is money received for goods or services which have not yet been delivered. An example of deferred revenue would be the money paid into student accounts which has not yet been spent. The fund balance includes funds assigned for encumbrances, money you know has to be spent on specific purposes. Notice the fund balance also includes $19,340 for inventory. This represents the value of inventory that is paid for and not yet received, while the inventory listed in assets represents the value of purchased food and supplies and USDA food held for future use. The total liabilities and fund balance represents the full statement of net position for the department. As you can see, the formula is assets equals liabilities plus fund balance. The most common and one of the most effective reports is the statement of activities. This report is used to identify what is actually happening in the school nutrition program. The statement of activities shows actual results for a specific period of time and is useful to stakeholders. It is an effective tool to use to communicate the status of the department to your food service managers and staff. One advantage is that the information is detailed but not too complicated to understand. Under each category, there are segments defining each source of revenue. The data from this report is useful in further analysis of your program. The statement of activities is comprised of three key areas: revenue, money coming in; expenditures, which are costs and money going out; and the net gain or loss. And this is what money you have to spend or what money you are in deficit. Now let's take a look at the next slide. We know that revenue is the money coming into our account. Revenue is broken into three main categories: federal, state, and local. Let's define the revenues in each of these areas. Federal sources are monies that come from reimbursements for free, reduced, and paid meals from breakfast, lunch, and after-school snacks. It also includes your 6-cent reimbursement from the Healthy Hunger-Free Kids Act. Also, you would have USDA food and federal grants recorded under federal revenue sources. Your state sources are going to be monies that are coming from PDE for free, reduced, and paid meals, which are served at breakfast and lunch. We are very fortunate in Pennsylvania that we receive 10 cents for every breakfast and lunch served, plus the added bonus of 2 cents or 4 cents for lunch meals when breakfast is served based on your percentage of participation. Our local sources are monies that are received from the sale of the paid and reduced meals for students, your adult meals, non-program sales, interest, vending, catering, and contract meals. Miscellaneous monies include funds received from the sale of any surplus equipment or any money for rebates from the previous year. It's important to know that in classifying that rebate money, if a rebate is received during the year in which the food is purchased, it is recorded as a reduction to food cost. If it is received after June 30th, it would be recorded as miscellaneous money. Fund transfer in are funds transferred to the school nutrition program from a contribution made to the school food service account, generally from the general fund. Here we can see on the revenue segment of the statement of activities. The report here shows 2 months of activity plus year to date. Each line reflects a source of income. September shows total income of $197,589 over 18 days, while October reflects income of $227,062 for 20 days of operation. Our year-to-date total revenue is $424,651. The second segment of the statement of activities is expenditures. Expenditures show the costs that are related to the school nutrition program. There are two broad categories in expenditures, direct and indirect. Direct costs are items that can be attributed directly to specific items such as food, paper, and labor. Indirect costs are charges that are prorated across several programs and cannot be directly attributed to a specific item. We're going to explore these categories in more detail. Direct costs are the costs the school food authority can easily connect to a specific line item or cost object. The top two cost objects are areas of direct costs are food and labor. Labor includes all of the wages, salaries, and benefits paid to employees with responsibilities directly attributable to the school nutrition program and the production of meals. Benefits are going to include FICA, PSERS, medical benefits, dental, workers' compensation, unemployment compensation, and may include employee uniforms, personal leave, sick days, and vacation. Our second major category are food costs. Food includes items purchased for use in the school nutrition program. These would include milk, produce, groceries. It also includes the rebates, money that's received from a company used to use their products as an incentive. Your USDA processing fees are included in food, as well as delivery fees for USDA foods. As a side note, remember that rebates received after the end of the fiscal year are recorded as a miscellaneous revenue. Industry standards for the school nutrition program recommend total labor be 40% of revenues, total food be 40% of revenue, leaving 20% to cover your other operating expenses or provide a cushion for building your fund balance. Other expenditure areas include capital assets, the purchase for major food service equipment, furniture, and technology. Anything with a $5,000 value and a life expectancy of over 1 year is considered to be a capital asset. These purchases are recorded as a fixed asset and include items like ovens, reach-in refrigerators, serving line equipment, dining room tables, and chairs. Remember, these purchases must be pre-approved by PDE by using the capital expenditure request, which is found in pairs. Capital purchases and improvements of buildings, land, and kitchen renovations are not allowed costs to the food service account. General operating supplies are going to include the supplies used in the program, such as cleaning, janitorial, office supplies, small equipment, and equipment repairs. In some cases, you may break out paper supplies or cleaning supplies and track them separately. Equipment repairs are often included in general operating supplies. Food service technology fees include fees paid to assist with data processing, computer support, annual fees for software, hardware maintenance, and other service fees. If you are employing the services of a food service management company, the fees for the purchased service are tracked as a professional service. Fees include operational costs, administrative fee, and management fee. Monies being paid back to the general fund are a balance sheet category, such as accounts payable due to or from the account. It is key to understand funds expected to be paid back to the general fund are considered a loan, and thus you need to create a loan document. The loan documentation needs to happen prior to the advancement of monies and needs to stipulate the terms for repayment. The loan document cannot come after the fact. The expenditures we discussed on these previous slides are considered to be direct costs, costs that the School Food Authority can easily connect to a specific cost object. Indirect costs are often referred to as overhead costs. They are going to be the expenses the department may be charged by the LEA for joint purposes and cannot be readily identified as a direct cost. USDA recommends the amount charged, although not required, be approved through a cost allocation plan. Costs charged directly to the food service department cannot be included in indirect costs. For example, if your department receives a monthly invoice for trash from the district or the trash company, these services cannot also be charged as an indirect cost. For more information on indirect costs, refer to the Food Nutrition Service Indirect Cost Guidance, which is SP 41-2011. Attachments can be found at the website identified on this slide. The following table indicates examples of some direct and indirect costs. Some indirect costs may be direct if, for example, the operation has its own electricity meter and there is a tangible bill. Then electricity would be considered a direct cost. It is important to be sure you know what items are charged to the department under the category of indirect, so that you are not being double charged for these items. Expenditures are also reflected on the statement of activities. Similar to what was reviewed when we looked at revenues, expenditures are detailed to provide a breakdown in a more understandable format to identify where your money is being spent. The report shown on the screen reflects 2 months of activity in the school nutrition program with year-to-date information. As you can see, each line item reflects a specific expenditure. The third segment of the statement of activities reflects the net gain or loss for the program. The net gain or loss is calculated by subtracting total expenditures from total revenues. As we can see from this report, the school nutrition program had a loss in September of over $10,000, but had a positive bottom line in October. However, year to date, the program shows a deficit of $3,500. So now that we have calculated the statement of activities and entered the information into the categories, we're ready to analyze what these numbers mean and how they can assist with recommendations for continued success or to begin to implement changes. So the first question that comes to mind is, why should we do financial analysis? Well, the analysis of our financial data is critical so that we can better understand the school nutrition program fiscal health. The analysis tools that we use enable us to assess the health of our program. Are we making money? Are we losing money? It allows us to be on an even field when we compare ourselves to other school food authorities. And it provides essential information that we can use as we look at the staffing of our operation. Are we needing to increase participation? Do we have a good participation level? How are our menus affecting participation? What are our high selling days? What are our low selling days? We also are going to use this information and determine how do we set meal prices and how do we set non-program food prices. And finally, the analysis helps us to identify goals for our program as we move forward into establishing the budget. In essence, what we're saying is the bottom line is that you're trying to run a program that doesn't lose money, and you can't run the best program if you don't analyze and look at what is going on. So just putting the numbers on a spreadsheet is not going to be effective. You need to understand those numbers and do the analysis. These are the tools we're going to take a look at today. These performance indicators are useful in assessing your department and allowing you to set benchmarks. The use of the data related to the program is helpful in assessing the program. The first area that we're going to take a look at are financial ratios. Financial ratios are helpful as you administrate, evaluate, and monitor the financial status of your operation. The ratio formula shown here allows you to identify the highest and lowest sources of revenue. The formula helps to compare current month to previous month, previous year, and or make comparisons with year-to-date information. And what we're going to be doing here is we're going to be comparing revenues to total revenues. In this case, we are looking at the total federal revenue from the Statement of Activities for October. That value was $86,428. Our total revenue for October was $227,062. By dividing the federal revenue by the total revenue, we can see that 38.1% of money coming into the department is from federal sources. Another way of looking at this is to think of that 100% total revenues as a dollar. For every dollar coming into your program, 38.1 cents is coming from federal revenue. So we're going to be dividing revenue line items by total revenues to get the percentage of revenue. So let's see what this looks like on our Statement of Activities. Here we can see the percentage of revenues have been calculated for each period, September, October, and year-to-date, using the operating ratio formulas. The total percentage of revenues will always equal 100% because you're dividing each line item by total revenues. It's important to show the percentage extended to at least one decimal point. Now I'd like you to find on this chart non-program sales, or what you would also know as your a la carte sales, for the month of September. When we divide the $37,950 by your total revenues of $197,589, we can see that our non-program sales are 19.2%, meaning that 19.2 cents of every dollar coming into the program is coming from non-program sales. So why would we want to analyze revenue financial ratios? Well, first, it allows you to identify your high and low sources of revenue per month and year to date. Let's look at the year to date information. If we look at interest, we can see that it is less than 1%, while our highest source of revenue is that federal revenue at 38.7%. We also see then that the majority of revenue coming into the program is coming from federal sources, indicating that we have a high percentage of free and reduced and meal sales. You can also identify if there are significant changes period to period. Here, if we take a look at adult sales, we can see that adult sales were very low in September at 1.2%. However, we had a 50.1% increase in October because our sales are now at 2.1%. This reflects that more adults are participating in the program and can be a check mark for you to identify that new marketing initiatives that you've tried or menu changes that you've made for adults are being positively accepted. We can use the data to make changes or continue success in the program. Based on the analysis, breakfast and adult sales are low in areas of revenue. So we want to look at how can we strategize to increase revenues from these areas and grow that participation rate. When we look at the ratios for revenues, and we've calculated those, we can now also do the same thing for our ratios for expenditures. We're also going to use that same formula where we are dividing each line item of the expenditure by total revenues. And I want to stress very strongly that expenditures are always divided by total revenues because we're looking to see what is our percentage of expenditures to revenues. Here is the formula if we were looking at our total purchased food for September. We had purchased $89,400 worth of food. Here we're going to divide the total food cost by the total revenues for September. And that revenue was $197,589. This tells us that 45.2% of our revenues are going for food. Again, remember we said we're looking at that total revenue as a dollar. So what that does is it tells us that for every dollar coming into our program, 45.2 cents is going out towards the purchase of food. This then leaves us with 54.8 cents to spend on labor, repairs, and other costs. Here we're going to look at the statement of activities with the financial ratios. And from this report, we can see that the greatest percentage of expenditures and where those are. Again, the report will show us how we are doing, allowing us to make adjustments and work to break even. When you look at salaries and wages plus employee benefits for the year, a total of 42.7 is attributed to labor. And we achieved that by adding the wages and salaries plus the employee benefits. So the 36.6 plus the 6.1 is going to give us 42.7. The combined total for food, which is our purchased food plus our USDA food, is going to be 48.3%. So the combined total of these two top expenditure areas is now at 91%, leaving 9% of revenues to cover all other costs. As we can see from this report, the operation had expenditures exceeding 5.2% in September, had a positive gain of 3% in October, but year to date is still 0.8% behind in expenditures to revenues. Once we've calculated those percentages and analyzed what is happening with our costs to expenditures, we can now utilize that information. But first we need to calculate a meal equivalent formula. The meal equivalent formula that we use is what is recommended by PDE, and it's the same formula that PDE uses with schools when they request a RFP for a food service management company. The formula is also based on research by the Applied Research Division of the Institute of Child Nutrition at the University of Mississippi. However, in Pennsylvania, we add in the extra 10 cents of state reimbursement that we receive for lunch. We will look at this as we review each areas of the formula. Meal equivalents are a very useful tool in equating the total number of meals produced. The student reimbursable meal is the standard unit of measure when calculating meal equivalents. And that student reimbursable meal is going to be our lunch. We're going to then convert breakfast, after-school snack program snacks, and non-program food sales to identify the total number of meals produced by the individual operation and the district. And again, this is something you can do by building and you can do for your district. We're going to walk through the formula for calculating meal equivalents. So our first calculation is lunches, and that's our baseline. Remember, lunches are going to be multiplied by 1 because the value that we're looking for are the number of lunches that we have prepared. When we look at breakfast is calculated using a conversion factor of 0.67, and the 0.67 is achieved by taking 3 breakfasts and dividing by 2 lunches, which is going to give us that 0.67 calculation. If you serve after-school snacks in the after-school snack program, you would also include those. After-school snacks are calculated by using a conversion factor of 0.33. For every 3 after-school snacks served are going to equal 1 lunch. Finally, non-program food dollars, or what we call a la carte, is divided by the current federal rate plus the state rate plus the current USDA commodity value. The department can also include catering service income when determining non-program meal equivalents. It's important that what you identify to be part of the non-program food dollars is consistent month to month and throughout the district. Here you can see in our program, we had adult money separated out as a separate line item. So we're going to be looking at non-program food dollars plus our adult dollars. Let's take a look now at a completed sheet. Here is the completed meal equivalent calculation for the month of October for our test district. If you were to ask your school nutrition managers the number of meals served in the program, they would probably just tell you the number of lunches that they serve because that's the number that stands out to them on a regular basis. However, in reality, the number of meals served includes your breakfast, your after-school snacks, and your non-program foods. In this case, we can see that for the district, a total of 69,245 meal equivalents were served during the month. This information is helpful in determining labor hours, identifying participation ratios, and planning for the future. So we can also take and look and say for the month we had 69,245 meal equivalents, but our daily meal equivalents, we had 20 operating days, were a total of $3,462. Probably the most important equation that many of you look for is determining your meals per labor hour. Well, now that we know our meal equivalents, we are able to calculate that. In this case, we knew that we had 3,462 meal equivalents for the LEA. Staffing information from other documentation shows that we have a total of 234 labor hours per day. By dividing the meal equivalents by the total labor hours, we can determine the meals per labor hour, which in this case is 14.7 meals per labor hour. The first question that I'm sure is jumping into your mind is this a good labor production number? Well, to answer that question, we need to know a lot more about the individual program. It may be the best that this LEA can do based on the line configurations, the length of the serving times, the required number of cashiers, whether they're using paper or permanent dishes, the age of equipment, whether the staff is union or non-union, and the skills of the employees. Additionally, we would want to look at the meal equivalents and labor hours for each individual school in this operation to see if there is a specific concern at a particular school. During the face-to-face trainings on the budget, we will delve more into this material. We can use the formulas for meal equivalents to assist us in gaining other information. It's important that we know what the cost of producing a meal equivalent is to ensure that we are correctly pricing our meals and other items to ensure that we are covering our costs. This formula is an excellent tool to identify costs and to analyze profits. The total expenditures from our October statement of activities was $220,374. Total meal equivalents for the district was $69,245. So our costs per meal equivalent are $3.18. Once we've analyzed and established our cost, then we want to take a look at what our revenue is. Here we are calculating, again using the same formula, however this time we're looking at total revenues. So we're taking $227,062 divided by meal equivalents of $69,245 and seeing that our revenue per meal equivalent is $3.27. We now can see that in our calculation, we have revenue of $3.27. We have expenses of $3.18. Thus, we can see we have a gain of 9 cents in revenues. So for the month of October, we have made some money, some gain on what we have served. However, if we were to have done this calculation based on our year-to-date totals, we would have seen that there is a loss, and we would want to look at what our revenues are and how we might be able to decrease our expenses. Both our non-program foods and our paid meals have to meet regulatory requirements. We're going to take a look at that aspect next. When we look at setting the prices for non-program foods, we need to ensure that we are meeting the criteria for pricing both the paid lunch and those non-program foods. Let's take a look at how to set prices for food items. The first step in this case is to identify the unit cost per food item. So we're taking the case cost and we're dividing it by the total number of units. Here we can see that a case of milk costs us $10.56. There are 48 cartons of milk in a case, which is going to be 22 cents per unit. The second step in the process is to calculate the base price of the item. It's important to identify that some foods may be sold at the base price, some may be increased a slight amount to encourage the purchase of healthy food items, and others may be marked up even more. It's recommended that the selling price of any 3 components is more than the price of a paid reimbursable meal. So in this case, we're using a food cost markup of 38%. 38% is covering all of our costs related to preparing, selling that food item. So our base price for that milk would be 57 cents. There's another way of calculating this number, and this is to look at establishing a food cost multiplier. Here we take $1 or 100%, and we divide the food cost markup into that to get a multiplier. And we could see that you can do a multiplier that would be lower, 34%, or higher at 44%. The lower the food cost markup, the higher your base price. The higher your food cost markup, the lower your base price. Either way, if we use a percentage or we use the food cost multiplier, we're going to get the same result. So here's a summary of the milk unit pricing. We calculated our raw cost at 22 cents. We used 38% as our markup, which set our base price at 57 cents. What price would you sell the milk for? We're now going to take a poll to determine the most popular selling price. You'll see a poll will pop up on your screen, and we'd like you to indicate what price, based on 57 cents, that you would sell that milk for. And I can tell you that, we have pretty much a tie between 50 and 55, and jumping to the lead is 60 cents. I feel like I'm at the racetrack, and 60 is in the lead. We're going to give you another 3 seconds here to put your pricing in, and we will broadcast those results for you. As you can see, the majority of you are would sell that milk by increasing it an additional 3 cents, rounding it to 60 cents. Some of you may elect to sell it for less than that, which is fine because you feel that it's a healthy item and you want your students to be able to purchase milk a la carte. But remember, the better you price that milk, the more you're covering all of your costs that are associated with the cost of the product. We're now going to take a look at another food item. Let's look at setting the price for an entree in the school lunch program. The case price for 72 slices of pizza is $24.48. Therefore, a piece of pizza is going to be 34 cents. Again, we're going to use the 38% food cost markup. We're using the multiplier here. And we're going to take the 34 times 2.6, which is going to give us a base price of 88 cents. Many of you may be looking at that and saying, well, why did you select $2 as your selling price? I would only sell that for $1 or $1.50. Here it's important to understand what the cost of what price I'm selling my lunch for. If my lunch is $2 and I'm selling my milk for $2.50, if my lunch is $2.50 and I'm selling my milk for, let's say, 50 cents, by selling pizza at $2 plus the price of 50-cent milk, I would meet or exceed the price of the reimbursable meal. We want to make sure that our meal component pricing encourages the purchase of the reimbursable meal. Today's student is very savvy. If you were selling that pizza for $1, they definitely would not be purchasing the meal. They would come in just to buy slices of pizza. USDA looks to you to establish pricing for non-program foods. For additional information, see the memo on meal pricing in the PAIRS download forms. As we discussed in Webinar 1, there is a requirement of the school nutrition program to use the paid lunch equity tool to establish prices for the paid meal. The tool available in the PAIRS is available in the PAIRS download forms. It's required to be completed annually, and you need to save that documentation, whether it's printed out or you save it on your computer, because it is reviewed during the administrative process, and that information will be uploaded into the compliance section. As we learned today, an analysis tool for the program is to look at your program revenues per meal equivalent and your program expenditures per meal equivalent. The paid lunch equity tool helps to identify if a price increase is needed and can be linked to financial data in the statement of activities. This is also a useful tool to help to determine what your adult selling price should be. When we look at revenue increase options, there are many helpful guides in the download forms section of PAIRS, Equity in School Meals Pricing, under a PowerPoint on how to complete the paid lunch equity tool. Refer to the PDE PAIRS download forms, Equity in School Meal Pricing section for additional training and resources on this section. As you continue to build your skills and knowledge in financial management and analysis, here are some upcoming resources you will want to look for. Coming soon to the School Nutrition Toolbox will be Unit 1, Basics of Financial Management. Followed by that will be Unit 2, Ethics of Financial Management, the Financial Reports and Analysis. During the early fall, we are going to have face-to-face regional trainings on budget development. One of the things that I want to stress is it's important to engage in financial management. The more you apply the skills that you are learning, the more you use the reports, the more you work with the data, the better you can plan, forecast, and make decisions to improve the financial status of your department.